You've probably heard the term petrodollar thrown around on the news, right? It's always tied to oil, Saudi Arabia, and the power of the US dollar. But what is it really, and why does it matter so much? Well, let's break it down.
Because, understanding the petrodollar system is actually the key to answering a massive question. After 50 years at the top, is the dollar's dominance finally coming to an end? That's the big idea we're going to unpack today.
So, what's the simple definition? Well, the popular story goes a little something like this. Oil exporting countries, with Saudi Arabia as the main player, agree to sell their oil only in US dollars. Then they take all that money they earn, the petrodollars, and recycle it by buying US Treasury bonds, which, in turn, helps fund the US government.
But here's where it gets interesting. That neat little story, it isn't the whole truth. The reality, as analysts at the Atlantic Council point out, is that there is no single official petrodollar agreement. It was never a formal treaty signed on paper. It's more of an informal but incredibly powerful arrangement that was born out of a period of total global chaos. And to really get how this whole thing came together, we've got to go back to where it all began, the wild and tumultuous 1970s. The early 70s were basically a perfect storm. First, in 1971, President Nixon slams the gold window shut, ending the dollar's direct link to gold and shaking the entire global economy. Then, in 73, the OPEC oil embargo sends energy prices through the roof. Suddenly, the U.S. desperately needed stable oil prices. And Saudi Arabia, now flooded with cash, but in a very unstable region, desperately needed security. This mutual need set the stage for a brand new kind of partnership. And listen, this wasn't some casual thing. We know from declassified memos sent to Secretary of State Henry Kissinger back in '74 that this was all incredibly strategic. The U.S. was actively pursuing a special relationship with the Saudis because they knew that Saudi decisions on oil and investments were absolutely critical to the health of the entire world economy.
So how does this whole petrodollar recycling thing actually work in practice? Okay, think of it this way. It's like a company town. The entire global economy is the town, and the U.S. is the company store. To buy the most important thing in town, energy, everyone has to use the company's currency, U.S. dollars. The oil producers then take all those dollars they earn and deposit them right back into the company store by buying U.S. bonds. It created this perfect loop, constant demand for dollars to buy oil, and a constant river of cash flowing right back to the U.S. to fund its government.
And this cycle, it had a profound, almost unimaginable effect. It cemented the dollar's place not just as another currency, but as the absolute central pillar of the entire global financial system.
I mean, the scale of the dollar's dominance is just staggering. Even today, almost 60% of all currency reserves held by the world's central banks are in US dollars. The euro is a very distant second, and every other currency is just a tiny sliver of the pie. That's what it means to be the world's reserve currency.
And it's not just about what governments hold. For day-to-day business, the dollar is even more dominant. Get this, it's on one side of nearly 90% of all global trades. Just think about that for a second. You basically can't operate in the international economy without using US dollars. And this isn't some new trend. This historical chart shows that for decades, the world has been parking its money in the US financial system. This created these huge, deep, liquid markets that are just unmatched anywhere else on the planet, making the dollar the safest and easiest currency to use on a global scale. It's a cycle that just keeps feeding itself.
But after 50 years, the world looks very, very different. The geopolitical and economic map is being completely redrawn, and that's creating brand new questions about this long-standing arrangement. We're seeing several major shifts happening all at once. For one, the U.S. is now the world's top oil producer, so it's way less dependent on the Middle East. At the same time, China has become Saudi Arabia's biggest and most important customer. Then you have U.S. financial sanctions, which are really pushing countries to find ways to do business outside the dollar. And on top of all that, Saudi Arabia itself is diversifying, joining the BRICS group of emerging economies and even exploring digital currencies with China. All of which brings us right back to our central question. With all these cracks starting to appear in the foundation, is the petrodollar system and the dollar's reign finally about to crumble?
Well, the consensus from our sources is pretty clear. Not so fast. Despite all these challenges, the dollar's dominance is incredibly resilient. Why? Because there's simply no viable alternative right now that offers the same depth, liquidity, and perceived safety as U.S. financial markets. The euro has its own issues, and China's currency isn't freely convertible. There's really no other game in town. But here's a fascinating way to look at it. What we might be seeing is a return to a different kind of normal. Research by economist Barry Eichengreen shows that this post-World War II era, with one single all-powerful currency, is actually a historical anomaly. If you look back to the period between the wars, for example, you had a duopoly where the US dollar and the British pound were both competing for influence. So maybe we're not heading for a dollar collapse, but a shift toward a more multipolar currency world. And the data actually backs this up. While the dollar is definitely still king, its share of global reserves has gradually slipped from a peak of over 71% back in 1999 down to about 58% today. Now, that's not a collapse, it's a slow, steady diversification as central banks start adding other currencies like the Australian and Canadian dollars to their mix.
So the main takeaway here is this. We are witnessing not a revolution, but an evolution. One analyst calls it a gradual democratization of the global financial landscape, a world where the dollar is still first among equals, but maybe not the only major player on the field anymore.
Now, this brings us to a key knowledge gap. If you really want to understand the future, you have to look at the plumbing of the financial system. For instance, how are networks like China's cross-border interbank payment system, or CIPS, creating an alternative to the dollar-dominated SWIFT network? SWIFT is the messaging system nearly all banks use for international transfers. That's the next layer you really need to explore. And here's another massive question mark: technology. What happens when central bank digital currencies, or even stablecoins that are pegged to the dollar, allow for instant payments across borders without needing the traditional banking system at all? This could completely reshape the landscape we've just been talking about. Which leaves us with one final thought. We've talked about geopolitics and high finance, but what does all of this actually mean for us? What would a world with several competing major currencies, a world less dominated by the dollar, actually look and feel like for your savings, your business, or even just your travels? That's the real-world consequence of this petrodollar paradox as it continues to unfold.